Hi, it's 6 October 2021 today. I'm going to touch on Hong Kong markets review. Is the tech stock at risk? Right now, given that global yields are spiking up, what's your view on the Chinese market? Before I proceed, appreciate a like for this video and do subscribe to the YouTube channel too. Thanks. Your support will be well appreciated. So what did I write this morning on Tiger Brokers and Reddit? Hang Seng came down today, breaking 24,000 to as low as 23,821 points. And the short sellers like George Soros and Gant are always writing and informing that they will not be king of the Chinese equities market and think that there's potential for greater risk on the downside. I mean, amidst a week of Chinese public holiday and low volume, they're definitely going to take this opportunity to let the market break down. Question is, can this be done? And even if break down to 22,500, will more bargain hunters start to cut pay? This is a question to ask. Hang Seng Tech today didn't close at above 5,900 points and closed at 5,866 points, 1.5% down, with relatively low volume at 19 billion. For Hang Seng, it closed 0.6% down at below 24,000. What's the future price movement at 5 plus PM? Nasdaq 100 was down by 1.4%, S&P down by 1.2%, and Dow was down by 1%, all fearing because of the global yield spike. Again, what's your view about the growth stock and its impact arising from increasing yield? Is it really a big factor? That's why I've always been saying that choosing the right stock with strong growth, solid business fundamental, and solid business model is critical. Do watch out for my support levels for Nasdaq 100 and S&P 500. China A50 already broke 15,000 points. Can they find support at 14,700 and revisit back to 15,000? That's a very important question to ask. S&P are still above 2% of the support level that I cited. Nasdaq 100 of course seems weak right now with yield spiking. Question is, what will happen when market opens and continue for the rest of the night tonight when the US market open? Global financial news, central bank on the move, New Zealand raises the rates, RBA still holding the rates, and oil price is above $78. That's something that the financial narrative will be saying that, well, inflation is not transitory, Federal Reserve is strong. So a big question to ask is, what do you think will happen? To me, I'm still not so negative in terms of the inflation news, saying that inflation will be so high permanently. To me, it's more about a supply issue right now because of certain supply constraint due to COVID situation. But in a longer term perspective, you pull a longer duration into perspective, I think inflation will come down. Copper price, it came down to around 4.1 USD. Will it break $4? There's a chance, but I'm not betting on it. A quick look about my Hong Kong watch list. Ning wasn't very strong, but it's still up. Xiaomi came down today, and Shenzhou International came down, Haidilao came down even lower to $26. Now to me, Alibaba, if you actually see it, is up in the Hong Kong market, but pre-market wise in US timing is down to 141, showing a potential sign that it may break down further. And viewers of my platform will know that I have always been cautioned to not touch Alibaba. Stay on the sideline, wouldn't be that bad. For Kwai Soh Tek, it's still struggling to hold on to 80 Hong Kong dollar. And to me, it's best to sit on the sideline for people with no position in Kwai Soh Tek. Just wait till the 3Q results or when the market stabilize in terms of the Nasdaq as well as the Hang Seng Tech, because there's a potential possibility of a down leg of around 10%. But again, it's also one have to consider what's your portfolio position right now. Do you have zero equities position in Chinese market? You have to think through all these dynamics. generally speaking, Chinese tech stock didn't suffer that badly because they are all holding on its critical support level. For me, not to take aggressive position because readers and viewers will know that I have a big position in Chinese equity. Big, but not that all. I still have sufficient cash on the sideline to allocate. That's why right now I'm only doing smaller bites to acquire at better discount for the Chinese equities. Tencent is struggling today, so best for us to do right now is stay on the sideline. It's at 442. We retest is low at around 412. Who knows? Best to wait until the Chinese market opens when its 1 week holiday is over and see whether its share buyback as well as the chips from the China market will come to support Tencent. What happened to Alibaba? Like I mentioned, Hong Kong market is up, but in US market pre-market timing right now is down. No need to rush, just stay on the sideline for me. Ning, I have cautioned when it was going above 100 Hong Kong dollar not to touch it because it's such high valuation right now, and even then now at around 84, you break down $80 Hong Kong dollars, there's a chance for it to go down easy to below 70. I have previously cautioned to stay out when it was 100. Now at 84, I still caution to stay out for myself. Can Xiaomi hold 20 Hong Kong dollar? Xiaomi has been doing a lot of share buyback. It's struggling for its life right now, but today market movement of down 1.5% is in sync with what Xiaomi is down today, around 1.4%. Having a decent position in Xiaomi, I think right now I will hold my position because to me I'm optimistic of it in the long term. But short term wise, if it moves down to 18 Hong Kong dollar, that's a very good price because its IPO price is 17 Hong Kong dollar. But for me, I'm not intending to acquire more positions unless it hit 18 Hong Kong dollar. So for Razer, I'm definitely not a fan. When it was around 2.8 Hong Kong dollars, I was warning my viewers and readers on Tiger platforms that, well, I wouldn't touch it. There's a possibility of inverse W shape, and indeed it happened and break down to around 2.3 at around 2 Hong Kong dollar. I was also saying that, well, it's risky. If it's go down, it can go down another leg to 1.6, and we know that recently at 1.6 it also did not hold. It's down 3.8%. That's more than broad market. I will advocate to myself that I will continue to stay out because it really doesn't look nice and it cannot hold 1.5. You know what it will do? It will move down to around 1.2, 1.3 Hong Kong dollar. As always, this should not be construed as any investment or trading advice. This reflects my thought process of what's happening to the market today as well as observations. Thank you.